All right, everybody, good afternoon. Today is the 16th of December. This is your Tesla review, and I want to go over this. You guys have heard my story many times, but if you haven't, I got long down here, and I showcased this in the Money Show in Las Vegas. And it was a big deal because my big thing is to specifically focus on aligning yourself with the bigger money and staying away from the noise. Noise would be things like, hey, Elon said this, or he did that, or he threw a beanbag through a window, or he told, the CEO of this company to go F themselves. That kind of stuff is just noise. And for me, it resonates and really has a big impact on retail traders. And although I am a retail trader, I like to think of myself as smart money, and I like to think like the big players. So I identified a demand zone back in the day when we took this trade, again at the beginning of or towards the end of 2024. Prices did pull back. We were able to add into the position. We were also able to go ahead and hedge this position and make 500%. And then we finally got the break of the EMA cloud. And this is really important. I'm going to talk a lot about that here in a few minutes as I give you the top down approach. Very, very important. Now, the Fibonacci extensions, I'm using the range where this gray box is, and I'm identifying new targets to the upside because we've absolutely crushed this one. There is a potential if Tesla decides to pull back, it would come back to the previous high. So 416 is kind of like that line in the sand, if you will, for this breakout. Okay, so our new targets to the upside are going to be I'm going to use for the rest of this year. We're going to go with the 23.6 by the 50. So we could see anywhere between 480 to 554. And again, that line in the sand or that over under is 416. Okay. Now I'll get rid of this red box and all this jazz when the year is over so that we can create a new chart. And I'll be happy to do that once we do that. Now, let's talk about the EMA. Why is this important? Because the divergence from current price, to the EMA is about $200. And what we know is that price always likes to come back to these clouds. Timing is the variable, and then we find support in those clouds. I'm not saying it's going to pull back to that cloud anytime soon, but what I would like to express with you, and this is my own theory, when we look at stocks like this that are so divergent from these levels, there's a couple things that will happen. And sure, you're going to say these are pretty trivial, but when you're extended this much, we either get a very sharp pullback very quickly to see that 9 EMA catch up with price. The second thing is we come in and then we digest and basically stay within about 23 to 38% of this move here. So I'll go ahead and show you that. So if I come up here and let's just say that, this is the top, what I'm talking about is the 23 to 38%, which happens to be 340 into about 387. We would see these levels hold, but we would digest in there for quite some time and
Market data connection
allow for
lost.
the 9 EMA to catch up with price.
Market data
Okay.
connection re-established.
And then the next thing that we would be looking at is, a possible forward split. I'm not saying it's going to happen, but it could. A lot of times I notice we do forward splits on names that are super powerful to the upside, and there's so much divergence that when you do these forward splits, they sort of catch up with them. So I'm just giving you three possibilities that we could see on the price of Tesla. The next thing that I want to do again is talk about the EMA. So as long as we're staying above the EMA cloud on the lower time frames, then you continue to ride this trend to the upside. Okay. And you start to get clues by looking at the smaller time frame to see if we break down underneath the cloud. Now, when I say small time frame, the lowest I want you to think is the 4 hour. And as I show you the top down approach, I'll go over this with you. So let's go now from the quarterly chart into the monthly. All right, so when we take a look at the monthly, you're all going to see a couple things I want to point out to you. The demand zone that I used for our entry this year was right here. So the structure comes in right there. And if you've watched my videos or you're in the room, then you understand exactly why I took this trade. The next thing I'll show you is that once we were able to close above the cloud, things really took off from here. We also created a new monthly demand zone, which I think is really important, and that level is around 275. So, in the event on a monthly chart, we were to see levels come all the way down towards 275, that would be about 200 bucks from now. I would be a huge buyer here. Okay. Um, we are very extended above the cloud here too. So the monthly looks good, but this is the assessment. The quarterly is super extended. The monthly is super extended. Now let's go ahead and go to our weekly chart. So here is the weekly chart. We are on 1, 2, 3 weeks up. All right. So a lot of times cycles like to happen in 2 to 3s. So for example here, 1, 2, 3 down, and then we open up down on that week, and then we find buyers. And same thing here, one, we open up two, open up three, but then we end up consolidating. And same thing here, 1, 2, 3. So we're starting to get to the point where there's a higher probability that things could slow down. Okay. But again, we're going to move into the lower time frames. The weekly, it is super extended as well. Price basically comes down into the 9 EMA is confluent to the proximal level of my previous supply zone. So around 355 is going to be your support on a weekly chart. Now that again is about $110 to the downside. So quite the divergence, if you will. So this tells me as a trader of Tesla and an investor, my concentration on the short term right now is going to be on a lower time frame than the weekly. All right. Now, I'll tell you, my whole trade this year has been about the quarterly. All right. But I think it's important now to start dialing it in and taking a look at the smaller time frame. So now we're going to go to a daily. All right, so when we look at the daily, you're going to notice that we created the inside and up formation here. My trendy EMA cloud is very robust. It's different than most of the EMA. Well, it should be different than all the EMA clouds that you see out there that other folks sell or give away or whatever the case may be. Mine is a lot more robust. I like to call it the Ferrari of EMA clouds because it has proprietary um, indicator within it as well that is allowing me to understand where demand zones are being formed and supply by giving me a red or a green signal. So arrow. All right. You can see that the green arrow came in. The formation was built. So from a daily perspective, now the weekly was around 355. The daily is saying, hey, we're safe this week as long as 430 holds. But again, guys, that's $40. And if you're buying up here at the top, you can get your butt handed to you. Okay. So you know, each one of you are different and you resonate with the chart, but every one of these time frames are so important to your overall success. It's just that when I take something on a quarterly, I can go, well, my risk right now, if I were to enter a long term trade, is about $200. It really is because I know that price will come into that EMA at some point and I could be adding $200 down. That's not really where I want to be. All right. So you have to look at each one of these time frames I'm showing you and go, okay, I resonate with that chart. So if I'm going to take a short-term trade, I'm going to follow the guidelines based off of that short-term chart. Okay, so where are you? Are you a short-term trader? Are you a swing trader? Are you a leap trader? Are you a positional trader? Those kind of things. And again, you resonate with that time frame, but it's very important to understand. I wish I would have known this as soon as I started. You have to take in all timeframes as a consideration. Okay. So we're going to move on. I'm going to take you to the 4 hour now. All right. So you're starting to notice here that the 4 hour is a lot closer to price than what all the other time frames are. And this will probably fit most people's risk tolerance. So today, what I noticed right away was, and I told the group, you want to stay long Tesla as long as we can stay above the 4 hour cloud. And so, look, if you get the dip into the 4 hour cloud, you buy it every single time. There is going to be a time that one of you out there, including myself, um, will look to to try and buy the dip, but the dip keeps dipping. But look, you don't do this after the 20th time of it working. You do this over and over, and that way, when it doesn't work, you really don't care because you've made so much money to the upside that this one little time doesn't hurt you. But I guarantee you, one of you out there is the person who has a hard time with confidence. And the reason why you have a hard time with confidence is because you're the person that tends to take things after 5 times of them happening. You know, it's like, yeah, of course I want that. I watched you show me there's a prize behind door number one. So, 10 times later, it's like, well, what door do you want? And you always say one. Don't be that person. Take it while it's here. And then when you take it for the last time, if it doesn't work, it's okay. All right. So, what is our risk as far as the 4 hour is concerned? Well, the 9 EMA is around 450, and the bottom of the cloud is around 416. So, we have some confluence there if we go back. So, here on the daily, notice that the 9 EMA is at 416, and notice the bottom of the 4 hour is at 416. So 416 is a really important level going into this week. And I wouldn't mind just rounding up and saying 420 is an important number going into this week. So, my thing was I was thinking about selling puts today just for extra income and feeling confident that we would stay above 420. So, right now, I'm going to tell you that your over under for, just short term is going to be 420. Let's go ahead and move on into even a smaller time frame here. And I'm going to take you into a 2 hour. And you'll notice again, price starts getting tighter and tighter with the cloud. If you like this, you can also trade the 2 hour. All right. Some of you may even trade the 1 hour. And you'll notice every time I come down in the time frame, we are creating less risk, if you will. What I love about what I'm seeing with Tesla is that they are creating pockets of demand. And if you're in the room, you know exactly what that looks like. So going into tomorrow, I really like this 2 hour or sorry, the 1 hour. So let's go ahead and write that in there as 1 hour. And then let's go back up once again to 2 hour. All right, so this is also a 2 hour, so we can take this out. Oops, sorry. So we can say 1 hour. We're just going to add to this 1 hour plus 2 hour. We might have to change that again. And then let's go to a 4 hour. All right, and then your 4 hour zone is down here. So a little bit different. So boom, right there. All right, so we're going to put 1 hour and 2 hour right here. This is your first level of support. We're going to go just a little bit above the zone and a little bit below it. And then this 4 hour has a bigger candle pushing out of it. So therefore, I would rate the zones, this zone a little bit stronger than this zone. Doesn't mean you're going to get it, but again, I like it just a little bit more. Let's go ahead and identify those levels. And we're going to go ahead and use the trendy edge in there as well. All right, so let's go ahead and make these green, just like that. And we can also make this one green. Okay. And this is what we have going on. Now, the levels that I gave you before to the upside were based on a quarterly chart. So we need something a little bit closer. So now we're going to reel that in just a tad. And we are going to go with the range on the 4 hour. And I'm going to choose this range here. And I'm actually going to go to this level there. And I'll come up to the 50. And that puts us about where we were on the quarterly chart. So around let's go 38.2. So we'll go just a little bit below it. So these are going to be short-term targets to the upside, 478 by 483. My overall thought going into Tuesday tomorrow is that we trade between these two levels. I wouldn't do an iron condor or anything like that. I'm super bullish, so I don't want to get stuck, in a trade. I just want to continue to stay long. But this is what I would say. If we break over that, then of course, I think that we're gunning towards 500. Down here, this is going to be your near term support. This is a better zone, if you will. And again, this will be resistance until proven otherwise. And then just to finish off this quick video, I would ask very kindly of you to go ahead and give this a like and share it with your friends and tag some of the big names out there that you're aware of. They could use this chart as well, just to help them out. And also, real quick, the 23.6 on the quarterly was also confluent with my overall 4 hour assessment chart. So I really, really like the 478 to 483. Just be careful in here. We could see a lot of resistance. But again, if we break above, let's look for 500. Go ahead and hit that like button. Please share. I really appreciate all of you. And I really want to do this. I don't know if I'll do it every single day, but I want to be your guy for Tesla. I just feel like I deserve it. And, yeah, I'm going to give you the best analysis that you can find out there for this name. Have a great day.